know that Liz and Jenny have another show that they have to host, and we don't want to delay getting them started. So Liz Dierking and Jenny Andrews, they're both former floor traders with Tastytrade, who is one of our sponsors today. And they can show you how to place directional trades using a fraction of the capital and defining your risk. Liz and Jenny, thank you so much for coming with us today. We're excited to hear about the zebra options strategy. Raleigh, I'll ask you for a little assist to make sure we've got them mic'd up.
Looks like they're here.
They are indeed. I see Liz is going live and Jenny. And
all right.
Hi, ladies. Good morning.
Good morning. Thank you for having us.
Yes,
thank you for doing this. I know it really adds an extra earlier hour to your schedule. It's greatly appreciated.
Oh, we wouldn't miss it. We've been ready for this. We've been listening to the music and watching those great quotes that are coming. It's been fun so far.
We're going to have a good time. Yep. And so Raleigh is our moderator, and we teased him, told him he might have to put a wig on, you know. But he is the great Oz behind the curtain.
Yes,
He's what makes everything happen. So I'm going to have him get the two of you ladies set up. You can do your screen share. I am just waiting to hear and dig in on what you're going to do today.
I will make one comment. I am the in Women in Wealth.
That's right. Our honorary male guest today.
All right, ladies, take it away. Grab the screen, and you guys are on.
All right.
Thank you very much, Raleigh.
All right, Jenny is going to start with our intro just because this is how we start every show every day. So we are going to cue up a little bit of music to get everybody started. This is what we filmed about 9 years ago when we started Tastytrade. Hold on, please.
Here we go. Here we go. All right. So that cracks me up every time I see it, Liz. What about you?
Well, I just wanted to say we wanted to show everybody that we are two ex-floor traders. That pretty much sums everything up that we are. We both came from the trading floor, but what we do now is we want to take the fear out of trading because it really isn't that hard. So we actually have fun. Our show is fun and lighthearted, but very, very educational. So we want to say you're going to have fun today, but buckle up because there is going to be some heavy content in the zebra option trading strategy.
Right. We will have some heavy content coming, but just to give you a little bit of our background, you can see we were both traders on the trading floor, and for many years, right out of college, Liz and I have been friends since we were 15 years old, and we both went onto the trading floor right after school. And Liz, I've heard this story before, but it mentions it in our song that even your water broke when we were on the trading floor.
This is factually accurate. I was on the trading floor for 12 years, and with my second child in the middle of a trade, surrounded by all men, my water broke on the trading floor. So the funny thing is we always say that women make the best traders because they don't panic. And this was a true testament to that because everyone else around me panicked, screaming like I've never heard before because a group of men doesn't know what to do when a woman's water breaks. So it just kind of brought it all home about how, women really are amazing traders, and that trading floor mentality is now gone, right, Jenny? Now it's completely gone.
Right. So, and so this is what's so great about the time we're living in now. Everyone can do it. Back in the day when we were we started in the 90s on the trading floor. Back then, it was very hard to be an at-home retail trader. I don't even know if that existed back then. But years later, once some great at-home platforms were introduced and once the fees came down, it became more available to everyone out there. So now it's available to everyone at home. And Liz is right. Women do make great traders. I've got a case in point like this morning. We have friends who trade, and a lot of men I know, they sometimes let their egos get in the way, where I think a lot of the women are just a little bit more capable of having a plan and sticking with their plan and then not letting their ego get in the way. This morning, I have a friend who's not having the best morning because he really thought the market was going to be down today. And he's just like, so mad and sticking with his gut and holding on to his positions. But I don't think it's going too well right now, Liz.
So what I like to say when people call me is there's no crying in trading. So they are definitely allowing their ego. So that's just it. Is we really want to empower women. We know that everybody watching this program has, one foot in the door already and are already out there. And we heard that you are an amazing group of educated women, and we love it and we welcome it. And we want to add to in any way that we can. So we do host a live show. If you can see back there, this is our usual set, and it's Oprah's old desk in the city of Chicago.
Right, that is a true story, right? So our studios in Chicago are right down the street from Oprah's old studios. And when her show ended, we got a lot of her old equipment. So the glass desk behind us is a desk from Oprah's network, not necessarily a desk. I don't think she interviewed at that desk, but it's one of the desks from her studio.
You don't know what she did on the desk.
I don't know.
But it is from her studio. So that's typically where we film from pre-pandemic. Now, like everybody else, we are now filming from our houses, and we have other lives. What I like from what Jenny and I do on this network has been true since the day we started with Tastytrade, in the fact that we are moms. Both of us have 2 kids. Both of us have lives. And so what we have done, and I think hopefully it comes across in this show, is take that fear out of saying, I'm a derivatives trader, but I can trade and I can do this for a couple hours a day or an hour a day or 30 minutes a day. It doesn't have to be sitting in front of the screen, and it doesn't have to be like it was in the pits anymore. So that's what I think you and I have done a good job at, Jenny, and I'm hoping that is being portrayed, is that it doesn't have to be the scary animal that it used to be on the trading floor. Everybody, and I want to see what you have to say to this, Jenny. Everybody used to ask me, how is it being a woman as a trader? How many times have you been asked this question?
Liz and I kind of laugh because people have always asked us that, and they'll always ask us, come talk about being a woman being a woman on the trading floor, being a woman in a man's industry. And the thing is, we never ever saw a difference. We never saw the lines. I never thought, I'm not going to go into that because that's a man's industry. I never thought of it. And you didn't either, Liz.
No. And there was a quote that was rolling before our show, and I'm actually going to go back and maybe Riley can tell me which one it was.
Oh, that I think by Shonda Rhimes.
Yes,
right?
Which was stop drawing the lines and step over them. It was really good.
Right. So this is awesome. I'm glad you guys are all watching. This is a great program, Women in Wealth, and there are, we have a really cool. There's a really cool Facebook page out there too that someone started. It's called the Women of Tastytrade, and I think that's a great resource. So if anyone's interested in that, I think that's a great resource for women. Like you said, Liz, we're busy. We're not at our computers all day. I know I have to run for school pickup, and we've got lots going on during the day. So we have come up with a way to trade and have kids and make breakfast and pick them up. I have to pick up my daughter by noon, and we've come up with a way to trade and keep a busy life at home and stay sane.
And absolutely. And, kind of to dip a toe into the water of what we're going to start talking about today, this is a trading strategy that we came up with. Now, granted, it's a complex option trading strategy. Everything is recorded. Everything's going to be archived. And to back it up,
we have YouTube clips. To back it up, we have YouTube clips on the video, or on this strategy. So I'm going to jump in, and hopefully we didn't lose Liz. We'll see if she comes back. I'm going to jump into this strategy. Let's see. Did we lose her? She'll be coming back soon. Just a quick overview of what we're going to be talking about.
We do have material and segments that will back up a lot of this stuff. So if
Oh,
it
Liz,
doesn't,
are you back? Liz, are you back? Are you back, Liz? All right, we lost you for a second.
I'm back. Just
Okay,
like
good. Okay, so the strategy that we're going to be going over today is called the zebra. We've created a handful of strategies only because for a couple of reasons. We work with limited capital. We don't have millions and millions of dollars in our trading account. So that's forced us to come up with strategic strategies because we hear all these trades. We work for those of you who know Tom Sosnoff. We work with him. We kind of trade hand in hand with him, and he has a very large account. So we hear a lot of these trades he's doing, and we think, well, how can we do that in our account? How can we fit that type of strategy into our account? So that's kind of how we came up with the zebra, trying to do some of the things he's doing, but do it with less capital.
Right. And so that's what options really allow and what are really fascinating to me to be able to do, because you can create whatever kind of risk portfolio or risk parameters that you're looking for in an individual trade. That's why I love options trading, because to me, it's a thinking man's strategy game. So this zebra is called the zero extrinsic back ratio.
Right, so that's what it stands for. You were named it. For those of you who options are made up of there's two things that go into the options price: the extrinsic value and the intrinsic value. And so the extrinsic value is what we don't want to pay. And so this is why we have this zero extrinsic back ratio. It is a position that will allow us to pay no extrinsic value, mimic a stock position at a fraction of the cost.
Right. So just by employing this, it's going to be, we're putting in 3 options that are going to mimic either buying or selling a stock. So what we also do on our show is we trade live in our show every single day. People tweet us with trade ideas. You can put the hashtag LIZJNY during our live show. It pops up. We'll look at different trade ideas. And so when we're doing this, all we're really doing is trying to put things into our own account. You'll watch us. Somebody will come up and say, I want to be bullish or bearish something. So you can go out and buy the stock, or you can create the zebra.
So we're going to go through a few key points of the strategy, and then we're going to put on some examples. So here we've got, zero extrinsic back ratio, just what I talked about. We are not paying extrinsic value. That's what allows us to put on, it's kind of funny. As I was looking through the different speakers and reading the what they're talking about. When you read ours, it says, giving this trade will give you a 50% probability of success. And that might sound bad, like, oh, I want a better than 50-50, a 50% probability of success. But anytime you buy a stock, you have a 50% probability of success. Anytime you sell a stock, you have a 50% probability of success. So we're teaching you how to mimic buying a stock or selling a stock at a fraction of the cost. So it is just a stock replacement, which is why it will have a 50% probability of success.
Correct. So kind of keep going forward. Jenny just hit what it's a synthetic stock replacement. That's all we're doing. We're just creating a stock replacement using less capital. We do it when implied volatility is low, just because that seems to be the prime time to put it up. Volatility is the fear index. So when volatility is low, it really does help create a lower cost basis for this.
I mean, if volatility were high, there would be other strategies we'd rather do. So I think that's just the thing. If volatility is high, we'd rather be getting into a stock position a different way. But if you really want to take a directional position on a stock and want to have defined risk and limited capital in it, the zebra makes sense. Again, here we go. Why? To add a directional position.
Correct. All right, let's keep moving forward with these. Why choose the zebra over a stock position? We kind of hit on this already. Requires a fraction of the capital. Now, the second one, that second bullet point, is what we haven't touched on yet.
That max loss is defined. So it might be a product that is already making all-time highs, and you think, well, I'm kind of bullish on this, but what if it does fall? Well, by putting this on, your max loss is defined. It's not just like buying the stock and you'll lose 1 for 1 as the stock goes down.
So when I was actually speaking to the people in Women in Wealth, when we were talking about what we were going to do today, because Jenny and I talk about trading on a daily basis, and I wasn't sure what set to do with this. I said, what about something that you can make a directional trade with defined risk, with a fraction of the capital. Those were the 3 sentences that really sum up the zebra. So you're creating a stock position with a fraction of the capital, defining your risk, meaning you can't lose more than what you paid for it, and using less capital than buying or selling the stock. So it was interesting that you brought up that 50-50, because that's not something that
Well, right, because again, the 50-50, it doesn't sound that appealing. It's like, well, I want better than 50% probability, but this will just mimic stock. And another great thing about this trade, it's allowable in an IRA. So in an IRA, you can put this on, because if you're buying stock in an IRA, it's going to be 100% cash secured. You're not going to be, it's not going to be like half the capital of the stock, like it would be trading on margin. That stock's going to be 100% cash secured. So putting this on in an IRA, you're going to be
but that's what happens with stock.
You're back again, Liz. We keep mentioning
it can help improve basis. And really, I want to see.
Okay, so I'm going to move on. Here we go. The setup of a zebra, and hopefully, Raleigh, I don't know if you can pop in. Is it Liz that we keep losing?
Yes, it is Liz. She freezes up every now and then. What she says is being buffered, and but you're coming through loud and clear.
Okay, I just wanted to make sure, because sometimes I'm not sure if it's you're losing me or losing her. So this is great. I'm going to keep on going with the strategy, and if she comes back, she comes back. But I can go through this, and hopefully she'll be back. But if not, I'll continue going through. Thanks, Raleigh. So looking at a zebra, we set it up by buying it, and it's pretty easy. We have pretty clear-cut instructions on how to set it up. If you're bullish and you want to mimic a long stock position, you buy 2 70 delta calls and sell 1 50 delta call. What that does is it gives you about a 90 delta position, which essentially mimics 100 shares of stock. And on the flip side, if you want a bearish position, you would be using the puts. You'd be buying 2 70 delta puts, selling 1 50 delta put, again, mimicking short stock, giving you about a short 90 delta, which would mimic about 100 short shares of stock. Now I'm going to go into the platform.
You're doing a great job, Jenny.
And set 2 of these up. I'm going to go and set 2. I went through the setup. I'm going to go in the platform and set some up. Let me see here. And this is what the graph will look like. Your P&L graph will look like compared to stock. So here's a call zebra, a bullish zebra. You can see that on your right side, and on the left side, what the stock graph looks like.
Correct. So, and you'll notice that the bullish zebra does have that little capped section underneath it where it is defined risk, as I'm sure Jenny has told you while I was ferociously trying to get my internet turned back on.
Yes, so I'm going to go in, and so this would be a bullish mimicking long stock. I'm going to go into the platform. I'm going to pop into our Tastyworks platform, and I'm going to look. We can see. Sorry, I've got part of the screen cut off here, but I can see SPUs are up 40. The Nasdaq's up 125. So really quite a rally in this market. Kind of crazy stuff going on. Yesterday, Trump saying there's not going to be a stimulus until after the election. Market had a big move down. Now he's saying, well, there will be some kind of stimulus. It's running right back up. Every day, you don't know what the market's going to give you.
No, you really don't. You don't. And, we've been seeing a lot of continuing up until this election. We've been seeing that implied volatility staying up there and that two-way action. So, let's take a look. And I'm glad you had it in there. Do you want to look at the Dow Jones Industrial Average or an ETF that mimics it, which is DIA?
Yeah, I mean, sure. This is something like you can pick the product. It works on most of the time. You can get this set up to make sense. Sometimes you look at it and you think, well, geez, I could just buy a deep in the money call to replicate stock and it will cost less, or I can just buy the stock and it won't cost that much. So sometimes you might choose to buy the stock instead of this, but in a product like diamonds, the Dow Jones, if someone said, I'm bullish on the market, I want to get long some Dow Jones, or I'm already long some ETFs, but maybe I want to replace it with something that's a little more defined risk. This is
especially through the election when you're looking at something like this. So this product, and like to Jenny's point, you can pick any product you like, but the Dow Jones Industrial Average or DIA is trading 281. So if you're going to buy this, especially in an IRA, it's going to hold up the entire amount.
Right. If I were to buy this in a margin account, it's using about $14,000. And now again, this is not a trade recommendation of buy the diamonds, buy the DIA. This is not a trade recommendation. This is how we place this trade. You can pick any product and use this type of trade.
And you can also pick either direction. So we're going to show you how you can either get a long position in this or a short position in this, because you can flip the cards over and do it to suit any of your assumptions. So to Jenny's point, if you see where her arrow is, in a margin account, it's going to hold up $14,000, and in an IRA, it's going to hold up $28,000 for 100 shares of the Dow Jones Industrial Average.
And so if we go and we just follow the specific guidelines of setting up a zebra, where it's buying 2 70 delta calls. So here we've got the delta column. Here's the 70 delta. We buy 2 70 delta calls. It's buy 2 of those. And we're using the Tastyworks platform. We love it. But this would work on any platform if you've got the delta column. And then you sell 1 50 delta call,
which is typically your at the money call.
Okay, so we buy 2, sell 1. So we have that extra long. We buy 2, sell 1. This is $26.85, so $2,685. So using $2,685 to mimic 100 long shares of the diamonds.
So now, Jenny, I know that I was out for a while, but if you talk about the profit potential of this, can we talk a little bit about the pros and cons? Now, when you're doing this and you're creating, you're buying 2 and selling 1, the most that you can lose, no matter what the situation, is what you paid for it. So $2,600, right?
Right, 2,685. So that's where the defined risk comes in.
The profit potential on the flip side is the same as if you owned the stock. You're going to get 1 for 1 to the upside with this type of a strategy.
Right. So often you'll hear people say, well, I want to get I want to put on a bullish position. I'm just going to buy a call. Well, the zebra is a way to put on the bullish position, give you the profit potential of being long that extra call, of having 100 shares of stock. But because we're washing the extrinsic value, and that's how this trade came about. We're selling that at the money, which has the most extrinsic value, and buying 2 deeper in the money with less extrinsic value. We get our break even right around where the stock is trading. And so as the stock moves up, we'll make money 1 for 1. Often when someone just buys a call, the stock has to move so far in order to catch up with that and to make money. You're usually giving up something when you just buy a call, as opposed to this strategy. You'll make money 1 for 1 if the stock goes up from when you place the trade.
So I'm smiling because this is something that we talk about all the time, which is extrinsic value. And to Jenny's point, what she was so eloquently saying is buying a call, you're giving up something. You're giving up extrinsic value. Mm-hmm. By creating this ratio spread, which yes, somebody had asked, is this just a ratio spread? The answer is yes, it is a ratio spread, but it's how it is set up. So we know if I say zebra that it's going to be mimicking stock, because a ratio spread is just a ratio of 2 options. You're buying 2, selling 1. It could be 3 to 1, could be 4 to 1, or wherever you are. Just a ratio is that. But when we say the lizard strategy, we know it's mimicking stock.
The zebra strategy.
Yes, the zebra. When we say the zebra strategy, what did I say? The lizard?
The lizard. Yeah, we've got quite a few strategies. But this is, and the reason we name them is so that we know exactly what we're talking about. So if I said to Liz, hey, Liz, put on a call ratio spread, she wouldn't know where to put the strikes or what I was looking for. But if I say, I'm going to put on a zebra, we're going to walk through a zebra today, she'll know exactly what strikes to use and exactly what we're doing. Just trying to mimic stock. And again, we talked about this, 50-50. That's what you see here, pop 47%. It's basically, right there around 50-50.
Can we, because we're in diamonds already, Jenny, flip the cards over? Because nothing we say is a trade recommendation. Can we flip the cards over and show how you can do the exact same thing where you can put on a bearish zebra? So
before I do that, I just want to go to the analysis page here and show, here it is. This flag is where the stock is trading. Here's your profit potential 1 for 1 as the stock moves up. And you can see your risk is capped at what you pay for.
Perfect. I mean, and I know $2,600 is the cap, and anywhere to the downside, if it falls completely out of bed, if we get a move like we've had, your risk is defined in this strategy.
Now, if we do it to the flip side and we put on the puts, we would be looking for the 70 delta put, buying 2, 70 delta puts and selling one 50 delta put. And again, it's usually right around the at the money. So we'd sell 150 delta put by 270 deltas. That's what gives us that 90 delta. 100 short shares of stock would be short 100 deltas. This is giving us a short 90 delta. And if it goes down, it's going to mimic short stock 1 for 1. Similar price to the calls.
And this is a little bit less expensive, if you'll notice, than the calls were. Now, somebody says, and I'm just kind of trying to monitor the chats. So somebody says, can you please define pop? So that's something that we take for granted. Pop is the probability of profit. So if you, Jenny, can you circle the pop on, or bring your cursor to where the pop is on this?
Right here.
It gives us a 52% probability of profit, meaning of making 1 penny. So you'll notice this is really mimicking stock because, 50-50 is if you're buying a stock or selling a stock, it's got a 50-50 pop. And so that's what pop is, the probability of profit. And it's a term that we use quite often that I don't know that people use outside the derivatives world.
No, maybe not. And Liz and I have been doing this a long time, right? We started on the trading floor in the 90s. We started this show over 9 years ago. We've been doing this show for 9 years. So pop, we know buying a stock or selling a stock, no matter what your assumption is or how you got there, you have a 50-50 chance of making money. There's a 50% chance it'll go up, a 50% chance it'll go down. So that's why if we put on this trade and we get our break even right where the stock is trading, we have a 50% pop, the same thing as buying or selling stock. Usually using options, we can get that pop over 50, and that's why we use options. And we talk there, we have, plenty of other strategies, and you can see them all on our show every day. But today we're just talking about how to replicate a stock position using less capital.
Right. Now, to Jenny's point, typically this is not our only trading strategy. This is one of the clubs in our bag of tricks. And it's something that when we want to replicate a stock position, that's the only time I'm ever leaning towards this zebra. But in my mind, I really do like using the capital efficiency of layering the options on top of one another.
So here you can see same thing, but to the flip side, we have a 1-for-1 profit potential to the downside, and our losses are capped at what we pay for it. So we pay $2,430 for this. It mimics being short 100 shares of the diamonds, and we have profit potential 1-for-1 to the downside.
Now, I'm going to guess you went over this, Jenny. I'm going to guess you did while I was, getting my coffee or whatever into my internet. But people are asking, so to create the bearish position, you're using all puts, and to create the bullish position, you're using all calls. And I know you went through this, correct?
Yes. Yeah.
Okay.
Well, but I mean, here it's in the setup, and again, the let's see, right here, all calls for a bullish, all puts for the bearish, always buying 2 and selling 1. We have this is going to be recorded and archived, and we have a video on YouTube that describes this strategy. Then you could go watch the video on YouTube after if you have any questions.
Right. So there is a lot of intricacies to this. So I don't think that option trading is at all complicated. Once you kind of understand the setup of, we talk about this every day, Jenny. You can buy a call, sell a call, buy a put, sell a put. That's it. And varying deltas. There's 4 things that we can do. And however we layer them on top of each other is the risk profiles we're looking for.
Right. So yesterday, a viewer called in, and we take live tweets every day. We take live tweets. If someone has an assumption, we'll help come up with different trade ideas. And so someone tweeted in and they said they wanted to get long Etsy. And looking at the chart, Liz and I thought, well, geez, Etsy's at all-time highs. So my concern here is what if something happens and it does come back down? But they really wanted to get long Etsy. And this is an opportunity where I might think, well, maybe a zebra is not a bad choice, because you would get long, profit 1-for-1 as the stock goes up, but your risk is defined in case it does fall back down.
It is defined in case it does come back down. So that's just it, is we can take these and layer them on top. Now, we're not saying that this is where it ends. So when you create a stock position, sure, if you create a stock position, you can still sell an option against it to help your cost basis. But that's a story for another day. This is just the basic setup of the stock replacement.
And I'll go through it again. I'll go through the example again. I'll put one on here using Etsy and just go through how
a lower price product. Well, Etsy's good. Etsy's good. We should go through this because somebody was questioning.
So And just to let people know, the reason I went to November monthlies, we're typically sticking with the monthly options, not the weeklies. They're more liquid. And it's whatever monthly has between 30 and 60 days. So October has too few, December has too many. That's why I went with November. Whatever month, when we trade whatever monthly cycle has between 30 and 60 days.
That is our wheelhouse and where we like to be. Now, granted, these could be done nearer term or farther out, especially for this type of strategy, but it just eliminates the guesswork. Let's try to stick to as close to 45 days in the regular cycle as we can.
Okay, so again, I'm going to go with sell the 50 delta, close to at the money. So I'm going to sell this 140 call. I'm going to sell one of those, buy 2 70 deltas. So I'm going to buy 2 of the 125s, buy 2 of those, sell 1 of the 40. So I have that extra long call, but my break even is right where the stock is trading, or right around where the stock is trading. $2,900 is my risk. So if Etsy falls out of bed and drops back down, my risk is the $2,900, but now I can benefit 1 for 1 if it continues to go up.
Now we can benefit 1 for 1. Do you want to show that again on the analysis page? I think it's pretty powerful.
Sure.
Yeah. Analysis is just something, this is a visual representation. Now, we use Tastyworks. This is a very easy platform for us to use because it eliminates a lot of the guesswork in here. And this is just a visual representation of where it is. And you can see the red portion is the capped, where it is capped for your loss, max loss of 29.35.
2,900. And it just versus, again, versus going out there and buying the stock. If I bought 100 shares of Etsy, well, that's going to use almost $7,000 in a margin account, or about $13,800 in a IRA.
Right, right. So Jenny, so kind of taking a step back, because we've got a lot of very, very, very educated women on this program right now who have probably been trading and doing different things, using different, sequences and however they get their assumption, or have been trading for years, or looking at backs of companies and things like that. What I think is really powerful, and what I hope the takeaway is this is just one portion of what we do. But I think the takeaway is you can get your assumption however you want to get your assumption. People might say, you might hear it in the supermarket, or somebody says you got to get in on this. And then using, the options to create the position you're looking for is what we really like to kind of show on a daily basis.
And I'm glad you brought that up, that this is just one club in our bag of tricks. We have so many strategies and so many things that we would do. And we just wanted to come out here and teach something that's newer. And a ratio spread is not new, but just using this, setting it up to watch extrinsic value, make a 50-50 bet, mimic stock at a fraction of the cost. That is what is, Liz and I are always trying to put together options to come up with something that we wanted to do. So again, we would hear people trading stocks, buying and selling, get in and out quickly, scalping, and this is a way to try to do that or mimic that at a fraction of the cost.
Well, and it's also funny too, because people, when they start investing, and I think you can attest to this as well, or people really understand, the buying of stocks. So that seems to be, step one is when people first get into investing. How many times have you been out and they're like, oh, you're a trader? What should I buy?
Exactly. They're right. That's what they always say.
And if you gave me the news ahead of time, I wouldn't be able to tell you. But what I can do is take whatever assumption that anybody does and be able to put a thinking man's game around it. Say, okay, this is your assumption. Let's create the same position using less capital, or giving you a better probability of success. Something else to kind of give you, so you're walking on, pavement instead of running on sand.
We could have used that yesterday, Liz. Yesterday, Liz and I, during our show, we had our viewers were coming up with quite a few clever sayings, and we could have used the walking on pavement instead of running on sand yesterday.
Yes, yesterday was a full show of one-liners or old sayings, which was actually pretty fun.
It was fun. I pulled up silver because you were asking for a low price product, and I know you have placed some zebras in silver. And I said we usually go out with the brown, between 30 and 60 days, but you wanted to put more of a longer term position on in silver. So you went all the way out and used the leaps. I did,
but I had done it a while ago. So let's take a look at January, the 100-day options. So if you're looking at something as low priced as silver, you can actually use capital. You can use these to layer and create a more capital efficient bullish trade. So same concept, you'd go 50 delta, 70 delta, Remember, ish. 54 is fine, 71 is fine. You're trying to wash your extrinsic value.
So here, this is where it becomes very kind of eye-opening of, wow, look at how inexpensive this is. $395 to mimic being long 100 shares of silver. I know silver's only, or SLV, the silver ETF. I know this is only a $22 product, so it'd be $2,200 in an IRA. But if I want to put in a bullish trade in silver and I can use $395 to do it, and this trade goes out till January, that's where I think the zebra becomes even more appealing.
I agree. And I actually think that these trades, this particular trade is wonderful for the IRA, because that's when it's very eye-opening. To your point, silver, I have it in my IRA. My name is Liz, and I have zebras for days in my IRA in silver, because it was something that I wanted to get long. I wanted to put it out in time, but I know how to use this and layer it. So instead of going out and just using the capital and having that held up, I did define my risk, and I went a little bit farther out in time and created this strategy. So whether or not I'm right, whether silver is going to continue to go up, I don't know. But I did that because if I'm wrong, my risk is defined.
And I love this because it gives people a start of something new to look at, a start of something new where they might say, oh, hey, so 2 by 1, I'm buying 2, I'm selling 1, I'm getting my break even right around where the stock is. It's just a starting point. And then, like you said, you use it different ways. I know you went and then sold some short-term calls against your extra. I might have looked at this and said, you know what is it going to look like if I do 3 by 2? How does that change? My position here? And it gives me a slightly better break even, increases the pop just a little bit. So I think it's a starting point, and that's what we love about our show, is that we have so many smart viewers out there. We were told by Women in Wealth, hey, these ladies tuning in are really bright and they're really versed in everything. So I
did. And that's spot on accurate, Jenny. You guys we're all coming from a place of they're very educated women. They want to take away. So we gave them something that was a little bit more heady. There are a couple questions that I know we're
Sure.
running a bit low on time. Do you mind if I read some of these, Jenny?
Absolutely.
So somebody asked if this is a martingale type hedge. Now, I don't know what that means.
I don't know what that means either, but
martingale type hedge. I have no idea what that means. This is a stock replacement. That's all we know. So if you're hedging, if you want to use it as a hedge, great. But I don't know what a martingale hedge is.
And again, it does have risk. And I want to be clear. If you put on a bullish zebra and the stock goes down, you'll lose money. And if you put on a bearish zebra and the stock goes up, the trade will lose. So it's a stock replacement using less capital, but it will lose if you're wrong on direction.
Correct. Just like if you buy or sell a stock and you're wrong directionally, you will lose money.
Right.
So just real quick, 2 other things that I wanted to go to, and this one says, please tell me. I took a trade Monday, the 5th, just straight calls. Okay. So this is an AMD. Can you type in AMD?
Sure.
This is what I love. We love doing this. This is just like what we do every day. People tweet us with trades. So okay. AMD, the 82.5 calls.
In what cycle does it say?
They didn't say which cycle. So I'm going to assume, let's just go to the no 44 days just because.
And I went to October just because they're,
okay.
They bought them. I'm guessing they bought them.
It said, would your strategy have worked here? So let's assess one versus the other. So if you're looking and nearer term, the zebra.
Okay. Okay. I'll go to November. So if they bought the
82.5 call, 82.5 call. You're paying $5.50 in extrinsic value, meaning that this stock has to go up by that amount just for you to break even.
So you can see your break even here. Now, if you buy them today and the stock goes up tomorrow, will they be profitable? Yes.
Yeah.
But as time passes, options lose they decay. They decay. So this, and you can see that your break even here is around 92, and your that probability of being profitable drops down to 35, where the zebra, if we did it here and we, sold the 50 delta, bought 270 deltas,
it's going to be a little bit more expensive.
It is more expensive.
It's more expensive, but what you're giving up, and you can see this right now, is where the break even is. So right now, you're going to make money 1 for 1 up for AMD at expiration, where in the other example, if you're outright buying an option, you're giving up that extrinsic value that you're buying. And so
like if we go ahead.
That's the name is zero extrinsic back ratio. We're creating something that eliminates paying that extrinsic value.
So if we were long this, if we put on the zebra yesterday and AMD's up $1.92, one of these would be up $192. Versus if we were long a call, we may not be up $192 because if the call's not in the money and then it's decaying, losing extrinsic value, or if the call's out of the money, it's not going to be up as much as a stock, like a stock replication.
The stack replication, right? I love this. So I'm glad they gave us an example.
Yeah, that was great. That was really great.
So yes, they do work. But now we say this all the time on the show. Everything is a give and take. So there is no, we as women want it all. Of course, I want it all. But there will always be some type of give up in options trading. So if it is, you know, you want the 1-for-1, you don't want to pay the extrinsic value, the zebra is a stock replacement. So we always say that there's lots of other strategies. It does help, but there always is kind of a give and take when you're putting something on.
Liz, I know you want it all. I never got to go to this. We lost you, and I was going to go to this. This is Liz back in the day when she had it all. Here we are, folks. That's when we thought we had it all. That was college. There we are.
So truly, Jenny and I have known each other since we were 15 years old, and she's the greatest trading buddy that I have ever had. So yes, I can't believe you brought that up. Thank you, Jenny.
Holy smoke.
This goes from college to 10 years ago to now. You keep getting better with age, Liz.
Oh, flattery will get you everywhere, Jenny. Thank you guys so much for everything.
Absolutely. And listen, I know that you have to run. There's a couple of quick questions I'd like to pop here at the end before you go.
Sure.
Obviously, as you said, you know, once again, addressing the fact that we've got educated traders out there. You were started with a little bit of a heady, as you said, a heady strategy here. But from your perspective, should beginners be checking you out? Are you more for intermediate traders, or do you work with all levels? Help us understand that a little bit.
So I believe we work with all levels. So we do on the show a lot more. We do some beginning segments, but everything that we do is archived. So the live show is more kind of, when we were looking at the chat here, the live show is actually more interactive than not. Sure. So if somebody wants to ask a beginner question, they can. We answer live tweets. So our live show is very interactive. It kind of depends on the level of who's watching.
And I mean, the cool thing about the Tastytrade website is there's a Learn Center. So on the Learn Center, everything's free, and you can take classes for free. You can start out with beginner shows for free, because we're not a beginner show, but we certainly have beginners watching us. And we do, like Liz said, take live tweets and answer questions, and we answer emails every day. So we're happy to help everyone get going. And usually after, a couple months, people are following. They're right in there with the rest of us.
Sure.
And when your show airs?
We are live from 10 to 11 Chicago, so Central Standard Time. So in about 13 minutes.
Okay, so we have to let you go. Ladies, thank you so much for coming. It was wonderful to meet you and to see you, and we look forward to having you back on some of our events that we've got coming up.
Of course, we'd love to.
Thank you so much.
Thanks, ladies.
Thank you. Have a wonderful day. Enjoy your event.
Okay, well, that was terrific. And what a great way to start the day with Liz and Jenny, getting us off on the right foot. Two engaging characters. I have to say, I was just trying to imagine what that would have been like to have been on the trading floor and have my water break. Of course, that wouldn't happen to me, but the fact that they shared that with us once again, that speaks to the kind of transparency we have on this program. Anyway, just real quickly here, was delighted to have them there, and as they mentioned, you can join Tastytrade for free. And as a part of that, you get their exclusive access to their groundbreaking research. They're referring to the fact that they've got so much educational material that's there. You get the daily market insight emails. And of course, you can watch the Liz and Jenny show on Tastytrade Live. And they have other live shows as well. So all you have to do is go to tastytrade.com and log in there. It's free, and you can take advantage of all that information. And with that, and before we bring on our new speaker, we have our first quiz of the day. And I know what it is, but Pat and Nikki, could you help me a little bit here? What happens here?
Well, I can. We have a quiz time at the top of every hour where we give away a $100 Amazon gift card. We also like to call it Making It Rain with Morgan's Money.
Morgan.
Thank you, Morgan.
Watching.
Yes, he is our sponsor and responsible for us giving away these great prizes. And at the top of every hour, we will participate in quiz time. We ask you to post the answer in chat. One of our moderators will let us know who has won. And we are going to kick it off. Nikki, you take away the first quiz.
All right, sounds good. So everybody get ready to put your answers in. And who was the first female CEO of a Fortune 500 company?
And I'm going to ask if you would try to remember to use the email address you use for registration, because we have a bit of difficulty getting those awards over to you if we don't have a way to communicate with you from how you registered. So that would be helpful.
All right,
All right. How are we
Wait
doing,
for our
guys?
admins. We're waiting for our moderators to let us know who won.
Yes, Raleigh, where's our theme music?
You know, da 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 da. Anyway, that's my attempt at the Jeopardy music.
Okay, it looks like we have a winner, Brittany Visin, V-I-S-I-N. Congratulations, you are our winner for the $100 Amazon gift card.
And the answer is?
Catherine Graham, Washington Post Company. And I think that we were talking about this, Raleigh. There was a movie with Meryl Streep, and she was...
And she played the role of Catherine Graham in that, absolutely.
Yeah, that was a great movie.
Excellent, excellent.